This is educational, not trading or investment advice, okay? This is entertainment, mainly educational. Future stocks, bond trading of any kind involves substantial risk. You may lose everything you have. Before trading or investments, do your own due diligence. This is not a recommendation to go out and trade with your money, okay? If you do so, you're on your own. If you're watching or listening to this video, you are agreeing to these terms. Okay, let's get to it. Welcome and thanks for stopping by. I'm Digital Micro. You're on the Digital Micro Trading Journal channel. Day trading for an ROI payout. It's just my trade journal market analysis, Tuesday, November 21st, 23. Daily affirmation. I see it and understand. Rigid discipline and rules. Flexible in outcome expectation. Independent thinker. Impeccable risk manager. Precision-based trader. Responsible business manager. And we do have FOMC minutes at 2 p.m. in the afternoon. There's also a 10 a.m. news catalyst, but I think the FOMC may give us a pop one way or the other. And, of course, we've got, I believe, NVIDIA reporting after the close. So on the left, the ES, you can see on this higher time frame daily chart, we seem from the prior Monday to be forming some kind of fair value gap on this long bar here. So much more pronounced on the up than the prior day dollar down. So it's not precisely lockstep inverse relationship with the dollar and the ES. So I'm just looking here at a 102.9 as a possible bottom on the dollar. I can show that another time, but basically it's a relative low from several days ago. We're not going to see sell-side liquidity on that quite yet. We're getting near it. As far as the ES, we've satisfied some of the projections, and I'll show you that on the next chart. So the first objective is these charts here back where September 14th was. This was a high that we talked about on the previous videos. This came in at 55, 45, 55. And yesterday, we went all the way up to 71 and maybe 71.25. And that is the level right here. And that comes in on Friday, September 1st. So these were the two big zones that I had for liquidity, buy-side liquidity. And we went there a lot faster than I thought we would. So let's get back to the candle chart and look at kind of the levels here on where we stand. What I did was I wanted to draw out currently, it's early because we haven't closed Tuesday, where we are in a potential daily fair value gap. So this big candle Monday, the big escape velocity on the body of the candle here, it basically started out at 45.26. The RTH open prior day was way down here at 45.24. So here we are, New York midnight open at 45.64, and London's coming in right here at about 58.25, 45.58.25. So where are we going for Tuesday? We've got news catalysts, so I've got no predictions, but this thing has not had any kind of displacement down. It's just been all straight up. And the other thing is this 9 EMA. I'll show you on another chart here. One sec. I wanted to talk about this 9 EMA way down here. 7 days of air. It's 44.96. Now, I'm not saying price is going to go down there, but I'm just saying this is, again, the second week where we've had 7 days of air, and it's so far above there. So over 60 handles currently. So I'm just saying, with the holiday week that usually is bullish into Thanksgiving and so many days of air, that's one thing that I'm looking at. This is getting a little bit long in the tooth, but with this fair value gap here forming and the bottom of the Friday here where we hit the top is 45.38.25, and again this new week open gap could be a draw, but I could see where basically because of Thanksgiving week and it's a short week, traders are going to be off. Maybe we don't go down until next week, sometime after the 1st of December, just because. And the CPI open for that day is way down here at 44.86. That seems miles away. That's just a big higher time frame tell. A lot of imbalances way below here, but this daily fair value gap, we'll know precisely what that looks like by Wednesday morning. Okay, let's go to the smaller time frame. The ES 15-minute. So above 15-minute imbalance. So this is on the 15-minute time frame. And as I mentioned, I just threw up this daily fair value gap imbalance. It's still forming. It's not all the way there, but I just like to get an idea of where price levels. And these two thick black lines were, again, the September levels that we anticipated on the prior videos that price could run up to. Now it's satisfied buy-side liquidity levels above. So the question is, can we go higher? We always can, but my thinking is, what else could be the catalyst to go up further? And if we do go up further, will it be just a wick, a candle wick, and not a candle body on the higher time frame and then come down? So the levels below, again, for me, clearly are the next sell side liquidity is the new week open gap down here. So that's 45.26 by 75 by 23.75. And this could not be in the next day. It could not even be in this week. But I'm just saying here, we've ramped up. We've got lots of air on the 9 EMA. Dollars reaching a critical point right now on the inverse downward sell side liquidity level. If it gets into the high 102s, that'll satisfy that. And we've got potentially some good news happening on all fronts right now. So I'm just saying, what's the catalyst for more going up here into December? So we've had a very big rally, and I'm just looking for a tracement. I'm not trying to be a bear, but I'm going to observe price action. And again, 10 o'clock a.m. Eastern and 2 o'clock is the FOMC minutes release. So we'll see if there's any surprises or catalysts, and we'll monitor price. But these are the charts for Tuesday that I've got, and that's my market analysis. Thanks so much. Shout out to the subscribers, and thanks for your support for the channel. Aloha. Take care. Bye.